we moved to a 4,200 target, which represents about 14% returns for this full year. And the story here is really simple. The economic reopening, and I know that there are problems right now with the virus and the vaccine, but this economic reopening, once it occurs towards the middle of the year, it's going to be much more powerful than anyone thinks, which is why we moved up our numbers.
Let's hit Intel. Shares are plunging today. Josh Lipton has the details. What happened here, Josh?
So, Sarah, Intel is on track here for its worst day since October. It's now trading about 20% off its most recent high. New CEO Pat Gelsinger on the conference call saying he's going to keep most chip production in-house. But we know the big challenge for Intel, of course, manufacturing issues. It now lags TSMC, which, remember, makes chips for Intel rivals like AMD. So in the meantime, as Intel now plays catch-up here, investors wonder, does it keep losing share to Lisa Su's company? On the other hand, tech analyst Patrick Moorhead sees reasons for optimism. Intel still dominates its core markets, meaning chips for PCs and servers. And Gelsinger, so he argues, has the experience and the chops to address Intel's big challenges. Guys, back to you.
Josh, thank you very much. Mike, Intel had the momentum going into the quarter, and even during the pre-release, the stock initially went up on those numbers, those sales.
Yeah.
So what's the read now?
I think you got a little bit of confused algorithms there when you did hit the numbers. And the quarter itself was definitely better than expected. I do think the idea of not making a really bold, comprehensive outsourcing plan probably is muddling the picture a little bit. The stock is back to trading where it did about 10 days ago. So it hasn't really lost all this recent lift. It's going to remain very much a sort of a show-me situation, just because when you get old tech, the stocks look very cheap for a very long period of time, but without top-line growth and a path to it, it's tough to get a lot of investors excited about spot. Right now, it's growth over real earnings, and what Intel has is real earnings and cash flow over growth. The market doesn't really want that right now.
Also have a 2.4% dividend yield, Jonathan. Do you think companies of that ilk can do well in the year ahead?
Yeah, I mean, listen, I actually think that semiconductors will have a great year this year compared to other tech companies because they're more levered to a reopening economy. And you've heard comments from, for example, and I know it may not be a specific Intel issue, but that there's, that they're having a hard time getting the chips they need as as demand is strong for cars and other kind of things that use all this semiconductor equipment. So, yeah, I think that there's no reason why we can't see upside in these types of names.
Shepard Smith here. Thanks for watching CNBC on YouTube.